Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, to discuss weekly performance in the Nasdaq-100. And of course, we'll take a look at that key retail data that came out this morning. Ryan, it's great to see you as always. Welcome back to Trade Talks. And you know what? This first chart that we're looking at kind of has the same pattern that we've been seeing for the past few weeks.
Yeah, so I think when we're looking at weekly performance, right, QQQM and QQQ were up nearly 1.8%. S&P 500 up 2.26%. S&P 500 value up near 3%. And really, it was all centered around Friday the 13th. It fueled very strong performance with some positive headlines out of China around their fight against COVID, the potential for some easing around some of the restrictions that are in place there, and then this kind of followed comments on Thursday from Fed Chairman Powell, where he reiterated that the two more 50 basis point rate hikes were on the table for the next two Fed meetings, and that officials were not actively considering that 75 basis point hike. And similarly, Fed officials James Bullock, Raphael Bostic, and Loretta Mester all separately echoed that same kind of strategy of two 50 basis point hikes for the next two meetings. So, last week and into this week, the market viewed that affirmation of those expectations positively.
Right. And Ryan, let's take a look at the retail sales data, because despite the volatility that we're seeing in the market, economic data has been quite good.
And this was reported yesterday and helped fuel another pretty decent day in the markets. It showed overall retail purchases growing by 0.9% month over month. This follows a revised 1.4% gain for the month of March. I think when you're looking at that growth, 9 of 13 retail categories showed growth. However, the worry is that the pickup is likely from higher prices as retail sales figures are not adjusted for inflation. So how much of this is really the strength of the consumer versus how much are consumers just paying more? And then you look at kind of keeping pace with some of these dynamics in the market. You're starting to see consumers increase kind of credit card lines and start to borrow from other sources, in terms of credit card accounts, et cetera. So you start to look at, well, is the consumer actually under some pressure here? Then you start to look at the retailers, and that's kind of the news today, that to send markets very firmly in the red. Q1 earnings from Target missed expectations. The company's reduced its full year forecast on operating income margin to about 6% of sales. That's down from 8% or more. This comes after Walmart yesterday reported Q1 earnings that disappointed. They cut its full year profit forecast. Target CEO Brian Cornell, specifically blamed higher prices. Talked about fuel and freight price increases really eating into the margin. And beyond that, Target saw a slowdown in some apparel and home goods. So, within this retail storm, we see Dollar Tree being dragged down. Walmart has been kind of in the middle of a two-day slide. Costco is down. Tractor Supply. All of this kind of surrounding, disappointing earnings. Disappointing earnings results, and by extension, there's more concerns around growth that are lingering out there.
Yeah, well, Ryan, here's a stat as you're looking for consumers and their credit card levels. Debt levels, according to LendingTree research, for March 2022 climbed 14% on an annual basis. That is the biggest increase since 1998 and the second biggest all the way back to 1984. So it will be interesting to see what forward retail and other consumer data looks like, since, of course, it's lagging numbers. But when we look at your last chart here with sector performance, where are you seeing under and outperformance?
Yeah, so for last week we had, it's very different than what it looks like today. We had all sectors in QQQ and the S&P 500 positive for the week. For QQQ, communication services, tech, and discretionary overweights were the largest contributors to performance. Biggest underperformance versus the S&P 500, largely explained by Q's lack of exposure to the energy sector. It was the best performing sector in the S&P 500, up over 9% for the week, as we saw crude oil prices last week. But Jill, to your point, I think when we start to look at the strength of the consumer, you look at sort of that increase in credit card debt, you look at changing spending dynamics. Do we start to see consumers tighten the fiscal belt and really focus their spending on more of the staples oriented or necessities? Time will tell, but certainly some interesting dynamics here in the market over the past 5 trading sessions.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.